Meta Platforms has lost 8% this day, in the last year 58%, and in the last 5 years the Meta chart is worse than 0%. They lost 7.5%. Meta looks like a value stock right now. If we look at Seeking Alpha, there is everywhere green buy or strong buy. I was thinking about buying Meta as a value and contrarian investor, but one thing stops me from buying, and I will tell you now what's that. Welcome to the first video of my new YouTube channel. It's not my first channel because I have a German value investing channel, but for the English speakers, and as you hear from my voice, I'm not a native speaker, of course. I hope I do not make too much mistakes and you can understand what I mean and what I want to present you. So this is the first video in the new channel, Contrarian Value. I am a value investor, a contrarian value investor, and today we want to talk about Meta Platforms. As I said before, chart is very bad. Figures says that forward PE at the moment is about 14. The free cash flow yield is 10% to the market cap. So this stock, Meta Platforms, looks very interesting. For my own, I use often Instagram. I'm not anymore a subscriber of Facebook, so I quit Facebook. But in many regions, like in Africa or parts of Asia, Facebook is like the whole internet. It's for many people the only possibility to get online and to get information. It's not always the best information, is also fake news, but this is another topic. So let's start to look a little bit at Meta Platforms, why on first view it's interesting. We start with revenues, the easiest thing. So these are such a good development of the turnover. It's very good. So for example, 2018, 56 billion turnover, and in the last 12 months 119. So they doubled their total revenues in about 5 years, and it's the same, almost the same with the net income. In 2019 there was a little bit of a slowdown, but it increased 2020 and 2021. So first view, good development. But yesterday came the earnings for Q2, and we will see them in just a second. They are not very good because there's not much growth anymore in Meta, because the whole world is using Facebook, Instagram and WhatsApp. So the growth is only coming from prices or from the advertisement sales prices, but not anymore from new customers. Okay, so the balance sheet as a whole looks good. So they have 41 billion in total cash and in short-term investments. And overall, the liabilities are only 44 billion. So these are 10% of the market cap. Market cap is 450 billion and the equity 126 billion. So on first view, this looks good. Liabilities are growing. They are increasing over the last years, but I do not think that this is the big problem. Now we come to the problem and to the issue why I am not buying Facebook as a value and contrarian investor. The cash flow of Facebook is very good. Last 12 months we had 58 billion in 12 months cash from operations. If we subtract the capital expenditures of 23 billion, we get the free cash flow. Free cash flow here at Meta is massive. And now we come to the point, what is Meta doing with the free cash flow? they do not invest. So I'm not sure why. It's maybe a wise decision to not invest in something which is too expensive or not matches the Meta way or kind of company. So they make repurchase of common stock. In the US, almost every big company is making stock repurchases if they have positive net income. So on first point, this is not in general bad, but I think this is a waste of shareholders' money, because the net income or the whole earnings of a company belongs to the shareholders. The shareholders potentially are you and I and everybody who gets the stock and gets his part of the business. Now, normally they could do different things. So reduce debt, but they have not much, so it's not necessary. They could pay a dividend. They could invest in new. They can make an M&A, so buy new companies or develop new products, which is not needed for this much cash here. They could pay a dividend. If Meta would pay a dividend, there will be about the dividend would be about 10%. Imagine 10% dividend from Meta. Interesting would be how the stock price would react. So I think with stock repurchases, they do the wrong thing and they burn shareholders' money. Normally, if they buy back so much stocks, the total amount of shares should decrease massively. And what we will see here, nothing. The diluted weighted average shares outstanding are not changing in a whole. So since 2016, we are here about 2.9 billion. And at the moment, we are at 2.86 billion. So no big change. But how is this happen if they spend so much? It's very easy. They repurchase stocks and they have stock options for their employees and their management. So in this case, the shareholder is paying billions, over 40 billions in the last 12 months, in the end for the employees and for the management as extra options. And I think this is not good. Here's an article which is describing the feeling now at the company of Facebook when the stock price is going down. And so let's see where I can find here. When software engineers join companies like Meta, Google or Amazon, their compensation typically consists of a roughly 50-50 mix of cash and stock options. So I didn't know that before. So stock options made up to 50 or more than 50% of the salary. So half price of the stock is half price of your income, or 25% less as a whole. So now let's look at the metadata. In quarter 2, to have a short net income was 6.6 billion. 1 year before 10.4 billion, so 36% less. And also here we have share repurchases in second quarter of 5.08 billion, almost 100%, or let's say, I'm not sure, 80% of the net income was going out as repurchases for the stock in the end for employees and management. And to have it here on a better overview, we can look at the 2021 yearly statement. So first of all, as we can see here, the revenue, we saw it before in Seeking Alpha, very good in the last quarters here from December 2019 to December 2021. Nice growth, okay, so we got it. Also, cash flow, free cash flow. 2021, 38 billion, 2019, 21 billion, almost doubled. So this is very impressive, and this would be the big reason as a value and contrarian investor to buy Meta. But I'm not doing, because they waste the shareholders' money, and bad management, also according to every big value investor like Buffett, Munger and so on, is very important. Total liabilities from 21 to 20, 10 billion more. So in this year, they used that to buy back shares, a thing that I don't like. And the total shareholders' equity, on the other hand, is decreasing a little bit. We will look here at the details. Because how this issue of new stocks for options and the repurchase of stock is a little bit, it's a little bit complex. We can see it in the income statement, in the balance sheet, and in the free cash flow statement. So if we start here, this is the balance sheet. We can see it here because the total shareholders' equity decreases. We will see why. If we go to the income statement, we can see total cost and expenses 71 billion in 2021. 9 billion of this cost and expenses are share-based compensation expenses. And these 9 billion are included in the net income, so they are subtracted before. But to have it here as a relation, 9 billion to 39 billion net income means 25% of income is share-based compensation expenses, and 2 years earlier there was half of that, so 4.8 billion. Okay, I hope you are not bored at the moment, but we will come to an end here. So let's see here consolidated statement of stockholders' equity. And here you can see how these repurchases are working in the equity of the company, because the share repurchases decrease the total shareholders' equity. When you first think about it, it should be the other way, but it is this way. And this is the reason in the end of 2020, the equity was 128 billion. Now it's 125. And this is because of the share repurchases. They work against the net income. Now again, with a market capitalization of 450 billion, if they would pay the share repurchases as dividend to the shareholders, not to the employees and the management, this would be a dividend ratio of 10%. Of course, employees and management and the CEO and all should have their stake from the net income of the company, but I think this is against the shareholders at Meta. Now the last thing here, we can see the cash flow, and also here we can see for 21 we have the 58 billion operating cash flow minus capex makes 40 billion free cash flow, minus in this case repurchase of Class A stock makes -4. So here we can see what the stock repurchases are doing to the cash flow statement of the company. I hope now you understood why I am not buying Meta. If the management or the CEO would change and they would change the policy on that, then maybe I would buy Meta. At the moment, I think management for me is not suitable and the policies they make. So if you like this video, my first English video, please write a comment how or about your feedback. If you want to see also a second video, then like the video, subscribe the channel. I wish you a nice day and say bye bye.